Hey guys, Mike here. So, oh boy, what another red day in the market. And the truth was, it wasn't as bad as it seemed. It's just the very end of the day, it sold off. There's a key level I'll tell you guys to put on your charts that, we came down super red, and boy, what a recovery up. Let me tell you, where the SPY actually went green. And then at the very end of the day, they sold it back down. And so we'll get into a few. We had some stocks report after earnings, like HIMS. We'll get into that one. It's getting taken out to the woodshed, even though you would think when you look at it that, oh my goodness, it must have missed and all that good stuff, and God, it must have been horrible, and that's not true at all. So we'll look at that one and see if they're going to end up buying the dip on that one. But understand that there's a few things I'm going to go into real quick here at the beginning. One, I'll show you exactly what I mean because somebody asked me this question: why you never follow Warren Buffett out of the market, and why you never ever follow him into the market unless you inherit $300 billion. And I say that jokingly, but seriously. And it's not just him, it's Berkshire Hathaway, which was killing it today, by the way. They were up huge. But I'll show you one. You can see it for yourself. Also, it's not unprecedented times we're seeing with the 5-year, or the 10-year, excuse me. This has happened before, another time, so it might sound familiar. I'm going to show you something else to watch very carefully because of seasonality. Because if this gets ramping up, it's going to put some real stress, okay, on the Fed, on the market. So watch out for it because we have been through this before. But I'll show you why to back up, the thesis of what I'm talking about here. And then, of course, we'll go into the SPY and some other stocks like NVIDIA, Tesla, Apple, Microsoft, all those fun ones, Palantir. But here's Warren Buffett, and it's just, it's Berkshire Hathaway. It's not Warren Buffett, okay? Again, they're sitting on a record amount of cash. It's not cash, by the way. They buy treasury and bonds every Monday. So it's not just cash sitting, doing nothing, okay? It's earning money, trust me, a lot of money. But when you look at like the dot-com bubble, you can see when the cash is draining like that, it means they're buying. Remember, the dot-com bubble really didn't start to kick off till 2000 and went all the way through 2003. Okay, but they started buying way early. So they got out way before the run-up happened, got in during it. Then they started raising cash in 03 through 05, which were really actually nice years to move up in the market, by the way. Then they started pouring money in 06, so they got to ride up 06, 07. Obviously, the market starts to tank in 08, 09. And then, of course, you've seen what happened in 2023, 2024, two of the greatest years in the S&P, and they were raising boatloads of cash. I mean, he sold Apple way back, and that happens, okay? They manage a very conservative portfolio. And so if you're super conservative and you have a lot of money that you can DCA in on these stocks, sure, you can follow them, but I'm just telling you, this shows you Berkshire Hathaway gets out early and they come back in early because they can, okay? Now, what else here? This is the Fed funds rate and the 10-year yield. Here's why we're in abnormal time. Normally, you can see when they cut that Fed funds rate, it goes down, the 10-year starts to follow. It's choppy, it's not as smooth as the Fed funds rate, but it's going in the same direction. Okay, that's what normally happens. And so when we scroll over, you can see, well, of course, now that is not the case. Here you can see it right there in 2018, same thing. It actually started dropping before they started cutting, by the way. But when you look over here now, that's not the case. They started cutting, and then the 10-year dipped a little bit, and then boom, away it went. Okay. Now, this is not at all abnormal in the fact that we have seen this before. If you go back to another time where we suffered from inflation, right there, what happened? They cut, 10-year went up, they cut, then they raised rates, right? And they tried cutting again, and it went up again. And so this is the only time I've seen this right here. Back in the 70s, when we had this crazy inflation going on. What do we have now? We had crazy inflation going on. And so the bond market is kind of scrambling on what to do. Because back then, we didn't have a crazy debt, right? Back in the 70s, it was just the inflation problem. And so, again, we've seen this before, but eventually what happened? The 10-year started to come back down, okay? Started to come back down to earth. Maybe that's what you're seeing now. And the other questions you guys are asking, like, why? Well, why is that happening now? The difference in these is what you have right there, that shaded area, that's a recession. We haven't had that. That's kind of the key here. And I think we all know this is a different time. The Fed is not going to raise rates and something absolutely insane happens. They wouldn't even raise rates when freaking inflation was up to 7%, right? They just kept saying it's transitory. So different time. But that's what's happening with the 10 years. So it's not like, oh, it's never happened before. Yes, it has. Okay. Now, speaking of inflation, watch XLE. Okay. You're not getting lower highs at all. You're not getting higher highs. It's kind of just sitting here in this ascending triangle. You look at seasonality. That's why I bring this up. March and April are two of the best performing months for XLE. That is one source right there, as you can see. And if you use another source, you can clearly see it even better. All right, you usually get a pop beginning of March, maybe kind of a dip, and then just takes off. And so if that happens, that's going to really affect everything. Because why? What's the top 4 stocks? 50% of right here. Exxon, Chevron, Conoco. I don't even know what Williams Company is, to be honest with you, but I know what the top three are, and they make up almost 45% of this ETF. And so if that happens, we've already lived this before. I'm not saying we're going through crazy oil prices or anything, but if it starts to go up and prices of the pump start to go up and oil starts to go up, that affects everything. And we know it. Okay, we've lived it. So that's not good for inflation either. Now, looking here at what was down today. It was finally good to see Chinese stocks down. Oh, you know it was a red day when they were finally down. Some things have been ripping and just tearing through everything. Also, who knew? It was better to be in travel stocks today. Look at Disney. And what you saw is what you're seeing in the last few days, this move into beaten down stocks, the Dollar Tree, the Dollar Generals, Target, Starbucks, all this fun stuff too. And you saw that with, Celsius popping, all these different areas. They're just beaten down, hammered. They're getting money rotated into them. And all these others that are just high flyers that have been moving up like crazy are getting hammered right now. Okay. We'll see how long that continues. Now, looking at SPY, you can see we're below the 50. They gapped us up this morning. People are like, yay, we're going to the moon. Nope. But mark this right here out, 599.98. It was a key level all day. All right, it came in. Also, it's where we stopped on Friday. We're below the 50 now, so mark that out because we got to get through that. That will be resistance now as we come back up, or when we come back up. The 100's right there, 592.50, I think it is, if I'm not mistaken. And so again, mark that out, and you can see when we look at this right here, if we can break through that, that will put 602.60 back on there. That's where we got rejected today, and then that ascending trend line right there, okay, where we got many rejections. And you can see why this doesn't want to fall any farther. I mean, if it does, you're looking around 595 to watch out for. We'll mark a line right there. That's going to be something to watch out for. 595.25, somewhere in there is what you want to watch for to the downside to see if that actually holds. You can see how many times we bounce from that. IWM, a complete mess. Below the 200 moving average today now. Not only went below 200 moving average, but it got rejected there. And you can see it's coming into a volume gap as well. And of course, this is what's happening. You're seeing all those high-flying, low-float stocks in the Russell getting absolutely obliterated. Okay, we've already gone through this before when the quantum stocks got hammered, all right? And all those nuclear stocks and everything else is getting toasted. And so the Russell is suffering. And what's really crazy about the Russell here, and we'll mark it right there, those two lines, that's pretty much where we bounced before a couple times. So if we break 213.56, watch out for the one below that. But what's crazy is it's following the 10-year now. Remember, there was an inverse relationship. I showed it to you multiple times. Since the 18th, I believe it is, it's just following the 10-year right on down. And that is not a good sign for the Russell. And again, that just shows you that is like, super risk off for a lot of those different stocks, and they still have not recovered. Okay, so if you see the Russell pumping, it's risk on, and oh my God, combined all these stocks right here that are on the Russell, right now they're just rotating from one to the other. All right, running it up and then selling it down 40, 50% and rotating to another one. All right, now Microsoft, you might notice it was down today. Another red day. Again, it was tagged in, looking good. Nope, 2 days of red. Came out. I don't even know if this is really true, to be honest with you. I don't know if I've tried to really look at this and see if this is true, but I don't know, everybody's believing this. I guess that's all that matters. But they canceled some data center leases, and they also are looking at cost-cutting measures. People got all worried, so of course they pushed this one down. And you can see it really wants to hold that 466, because if not, you can see this one drop even further. Again, it's below all the moving averages as well, the 50, the 100, and the 200. It's got like a weekly, I believe, 50 moving average somewhere in that volume gap right there. But you can clearly see this is one of those ones that needs to bounce right here. It could come down in this daily fair value gap right here, which would be another 4% drop. I hate the equal lows, by the way. You see the equal lows to the left of it. That's definitely not a good thing. It usually likes to take out equal lows before it moves back up. So we're going to mark out this. This is a weekly fair value gap. And then right above it, you got those equal lows, also a daily fair value gap. So we'll see if we get down to this area right here between like 380, 398, somewhere in there to finally get a bounce here. And it definitely needs it. And again, we're in, bearish seasonality right now, but March usually kicks off a good one. So we're going to see if this is more than that, because that's the third highest weighted stock in the index, which is not good. But then there's Apple. Old stubborn Apple is one of I remember said, and this thing refuses to fall down there. And again, I told you I'm going to give it the benefit of the doubt, drew this channel out probably weeks ago. And so I said, here it is. I believe because it is Apple, and don't forget, stock buybacks have started back again. It will be the biggest beneficiary of that. So, it's holding these fibs, kind of just bouncing up, running up on the fibs at this point in time. And I didn't see any news out that would make it go crazy or anything, but it's just Apple, one of the heaviest weighted stocks out there. And so as long as it stays up in this channel, I expect it to kind of move back and forth. A lot of people are shorting it, trying to get it, to come down to usually like 235, and then once it breaks 235, 226. But it's just being stubborn right now. So if that one falls, though, boy, that's going to be a heavy weight on the market. Here's another one, NVIDIA. So if you have Microsoft, Apple, and NVIDIA coming down at the same time, that is huge, okay? Bad day for NVIDIA. It was green, come down. Where did it stop? Right at the level we talked about, 130.11. And the reason why you want to break that, again, the 200 is right there. You got earnings on Wednesday. All of this could change. So I'm not going to talk about too much, but the reason why you want to hold that level, you can see how important it is. You can see the bounces, right? The support resistance, support resistance, support resistance levels going all the way back to June of last year. Okay, so that's why that one's kind of key. Does have a 200 right below it, but earnings is going to decide all of this right here. And you're seeing it, boy. I mean, these stocks are getting punished, and it has a high bar to meet when it reports earnings. And if it gets dropped, all the AI stocks, especially those small cap, high floated stocks, are going to get crushed into dust. Okay. If it can meet it, though, and it starts to rally, it's going to lift all boats right along with it. The question is, will it be able to hold the gains? That's going to be the big question. And they're going to be asking a lot about Microsoft and these data centers. Okay. Now, Tesla, man, this one right here, oh boy. So I always said, never own it, but I'll trade it. This one right here is just a mess. Again, below the 100, it hadn't broke the other low right there, which is a good thing. But again, down 34% from the high right here. It had some news. It gapped up this morning on, hey, look, we're rolling out FSD and all that stuff, and that's great. But then it lost those gains with a quickness, okay? And so we're going to see if it's going to build a hold right there at the 326 mark. If it does come down, if that breaks, of course, I think everybody's kind of looking at this going, boy, is that 200 just inevitable or not? Let me know in the comments what you think on that. If you think it's just inevitable to come down and challenge the 200, maybe challenge the November 5th, pop we got and everything like that. Let me know what you think on that one. And then you got HIMS. This one right here is down 41%. And after hours, it went down another 16%, if I'm not mistaken. Earnings, again, the guide for Q1, 520 to 541 million. Again, the guidance was higher than what they expected. Revenue was higher than what they expected. I hadn't heard anything on the other end on this one right now, but it's one of those high fly, low float stocks, right? And so it's at a key level. It's at the golden pocket right now, sitting there where there is support, sitting at a trend line. Will that hold? That's going to be the question you got to see. Let me know in the comments if you're buying down here and stuff. Or is it going to end up breaking down even more? When you look what they did during the day, though, dropped it 10%. And then ran it up 20% like midday. Just like really? Like liquidity grab down, move it up, and now we're going to drop it. And after hours, I always love how the market does that and stuff. But, we're going to see if this is as much blood as they want, or are they going to want more? It did break that level, the low that was today, set a new low. You look at PLTR, there's another one. To me, let me know. I always said this valuation is still crazy as can be. But it hadn't quite hit the golden pocket. But there's a lot of confluence here. Like confluence. You got the 50 moving average, golden pocket, was resistance, could flip it into support right there, as you can see. So a whole lot of confluence right here, plus gap fill. All right, so 4 things going on there. If it comes down and hits this, let me know what you think about that one. When I look at it, you can see the volume range, volume profile on this, kind of matching that up as well. And so that'll be interesting. Again, the valuation, you think like HIMS went up. The valuation of this one is insane compared to HIMS, and there's a couple others like that. I think HIMS is like 6 times sales, and I forgot what the heck PLTR is. Some crazy number though. But yeah, we'll see if this is going to come down. You really, if you're a PLTR holder, you want it to fill that gap and come down this area, obviously, to get a bounce. Let me know if you feel that's a strong area or not. Now, Roku, I like to look at stocks that were green. This was green all day. And this is a key area right here. This was the area where it broke out on earnings, sold completely back down, and you can see got the bounce. Will the bounce hold? That's what we got to find out. But just keep an eye on this one. If this holds, and especially if it gets above like that 91.24, I believe it is, and retest to go higher, definitely watch Roku for that. And of course, obviously, if it breaks down below that area, then see you later. Now, looking at earnings for tomorrow, Home Depot is a big one in the morning right here. And then in the afternoon, you got Kava, which has been getting hammered. And I believe First Solar, this other solar company last week did good. You're looking Lucid, Lemonade. as well. And then Intuit. Only data tomorrow is going to be CB Consumer Confidence, Richmond Fed Manufacturing Index. We'll see if those are good or not, and finally get some news to maybe move the market a little more to the upside, or if it's bad and we start heading down some more. Let me know in the comments what you think is going to happen here. Please hit that like and subscribe button on your way out. Think about signing up for the membership, less than McDonald's combo, and I will see you guys tomorrow for another fun one.